Thank you. Well, thank you very much. Thank you for having me. So the question that I put for my talk is a question I often get as a central banker. Can Bitcoin, stablecoins, and CBDCs coexist? And if you don't have a lot of time, let me give you the short answer. It will be yes, they can, because they will have different roles to play. Now, let me first take a look at the current system before we talk about the future system. Now, the current system, if you think about CBDCs as a tokenized form of central bank money, then currently central bank money comes in two forms, which is on the one hand these nice banknotes that we all know, I think still the safest offline means of payment. And then we have central bank money in digital form. That's in the form of deposit accounts that financial institutions, primarily banks, have with the central bank. And that's not for retail use, that's not for the public at large. But these are basically the two forms of central bank money we have nowadays. And what you use mostly when you make payments is a private form of money. Issued by private firms, by banks. And these are the commercial bank deposits all of us use. You can use them with different devices. You can connect your deposit account with a credit card, with a debit card, and more lately with your smartphones. But basically you make payments with your commercial bank deposits, which is a private form of money. Now, actually, what are people using? And at the Swiss National Bank, we started in 2017 a regular survey to ask people in Switzerland, like, how do you pay? And you see at the top here, that's for Switzerland as a whole. One thing you clearly see is that cash, that's that blue bar you have, has been declining dramatically, but mainly because of COVID. Since the pandemic, the retreat of cash hasn't been that drastic anymore. But still, you see in 2017, you had about 70% in Switzerland. About 70% of the payments done in Switzerland were done in cash. And that has declined in 2022 to less than 40%. Now, if you look at the 22 year and you break that up, for instance, in terms of gender, you don't see a difference there. But in age group, you clearly see a difference. And that also is kind of a dooms scenario for cash, because it's the younger people who are not using cash that much anymore. It's clearly the older generation that still uses a lot of cash. Interesting also, I guess, for being here in the Italian-speaking part, if you look at the different language region, you see that actually in the Italian-speaking part, most cash is used. So usually the people say it's the German-speaking people, Germany, Austria, Switzerland, classified as German-speaking, using a lot of cash. But if you look within Switzerland, it's actually the French-speaking and the Italian-speaking region that uses more cash. But overall on decline. Another interesting breakup is if you look at income, and then you see that the lower your income is, the more likely you are using cash. So it's more the high income group that doesn't use cash. So I guess these are some interesting facts. Also, some of the concerns behind here with some of the central banks that you have, especially the elderly and the low-income groups, that you lose those when you go into more and more digital forms of payments. We also ask people actually in Switzerland, do you own cryptocurrencies or do you own stablecoins? And when we look at the 22 results, you can see that in Switzerland you have more than 10% of the people actually holding either cryptocurrencies or stablecoins. Unfortunately, we did not differentiate here, but still an interesting number. If you break it down here by gender, then you see a clear difference. It's clearly more on the male side where cryptocurrencies and stablecoins are used. If you go, also age group plays a role, but if you look, for instance, for female inhabitants of Switzerland over 55, you have hardly any people who use or own cryptocurrencies and stablecoins, and it's very different if you go to the younger generation, especially to the male population. So I think some interesting facts about payment methods in Switzerland. Now, clearly we see that the payment landscape is changing. cash on the decline. We have these new forms, stablecoins, cryptocurrencies. Now, how could the future look like? Now, Bitcoin. I guess I don't tell you anything new here when I tell you that Bitcoin is extremely volatile. That's what makes it interesting. That's what makes it interesting from an investment point of view. That's one of the reasons why most commercial banks, why Wall Street is getting so interested in cryptocurrencies, because you have a lot of volatility. Volatility is very interesting for you as an investor. And it's really a different ballpark here. If you look, and what I show you here on this graph is the realized volatility, 30-day realized volatility, a comparison between Bitcoin in blue, and look at, for instance, at gold. That should be in green. Gold is relatively volatile, but it's clearly a huge, huge difference between Bitcoin and gold. It's also quite a big difference if you look at the stock market. Here in red, the European stock market, the volatility is much, much lower. So Bitcoin is an interesting investment asset. I guess in a lot of countries, I saw there's one talk about basically using Bitcoin in countries where you have very high inflation. That's clearly an option. But most of the time, then you use Bitcoin for your savings, not so much for payments, because for most people at least, Bitcoin is too volatile to be used as a means of payment. But Bitcoin, and here to the question posed at the beginning, clearly has a role, I guess, in the future as a digital asset. In that sense, it clearly can coexist with stablecoins and also with CBDCs because it plays a different role. Now, the question is stablecoins, and actually that's exactly why stablecoins came into existence, because of the volatility of Bitcoin. That's why stablecoins are so popular. They are stabilized against a central bank issued currency, mostly against the US dollar, which basically means you tie to the monetary policy of the Federal Reserve. But that's where stablecoins come in. It's not just US dollar denominated stablecoins, but they are clearly the most popular of all. So a future system could look like that. You have still banks with commercial bank deposits. You still have central banks issuing banknotes for retail payments, and then you have stablecoin issuers issuing stablecoins. And stablecoins, of course, are very handy if you want to make payments on the blockchain. So I guess the whole question here is how important or how many use cases do you have for payments on a blockchain? And there clearly stablecoins are one way to go. Now, what you see, and here's one of the predictions I make or forecasts, is what you see is that stablecoin issuers have clearly an economic incentive to become more and more like banks. So in the beginning, the idea is, and that's exactly how banks started. You would make a deposit and you would get, early on when banknotes still were privately issued, you would get basically a receipt for your deposit, and that's what you then used later on as a payment. Stablecoin more or less started like that, but it's clearly much more interesting if you do not just keep these deposits in a bank account, for instance, or in cash, but if you invest that. And that's moving to the right side here, and you get a balance sheet that will still be extremely conservative for stablecoins. If you compare a stablecoin issuer's balance sheet with a balance sheet of a commercial bank, then the stablecoin issuer has clearly a much higher share of high-quality liquid assets, much more so than a commercial bank. But my prediction would be that they move more and more together, or in other words, that stablecoin issuers will become more and more like banks, because there's a financial incentive here. You make much higher returns if you invest your assets in other things than just commercial bank deposits. So my prediction here will be that you will have stablecoins, but stablecoins can be issued either by commercial banks or by stablecoin issuers, and stablecoin issuers will become more and more like commercial banks. They will become more and more regulated, and their balance sheet will also more and more look like a commercial bank balance sheet. You might still have differences, but they are clearly shrinking. Retail CBDC. Does anyone in here think we need a retail CBDC? I didn't think so. Or there is actually more than I thought so. Thank you, Paolo. So retail CBDC. I mean, at the Swiss National Bank, we came to the conclusion we do not really need it for Switzerland. We have all these. We do have these different private solutions. I mean, the scenario where you could maybe have a use case for retail CBDCs when these private solutions are not existing. So there are some countries where that is an issue. Another one could be if the private sector solution has a monopoly, and if you want to offer an alternative, at least the second way, that people do not have to use the only existing private alternative. So those could be two cases where it would make sense to use a retail CBDC. But as I said, we came to the conclusion that's not needed. Actually, I was in China 2 months ago. I was in Shanghai. China has a CBDC, a retail CBDC. It's not the only country for retail CBDC. My experience there was you cannot use it. It exists, but no merchants, at least the ones I tried, there is neither a small merchant nor a taxi driver who accepts retail CBDC. They also, of course, do not accept cash. They also do not accept credit cards. The only thing, at least in Shanghai, that they accept is Alipay. And now you can actually connect your credit card with the Alipay app, so you can pay even if you don't have a bank account in China. But interestingly, you see that the CBDC is not used. And the best explanation, I mean, there might be different explanations, but the best I got from an economic incentive point of view is that most of these taxi drivers or merchants also have a loan from Alipay. And they actually want Alipay to see their income because they get a better credit rating and they get better conditions on their loans. So it just is one example of how the private sector actually can bundle different services, something that the central bank cannot do. And I think that the private sector is always much better in coming up with new services, in bundling different services. So I think that's one of the reasons why if you issue a retail CBDC, you might not be that successful, that people will not accept it. Now, how about a wholesale CBDC? And here, I think Switzerland, the Swiss National Bank, is clearly interested, and we have been doing several experiments with wholesale CBDC. A wholesale CBDC would just be a tokenization of the deposits that the financial institutions have with the central bank. And so it would be used for settlement of payments between these banks, between the financial institutions, which also could be stablecoin issuers in the future. And there we clearly see a big advantage, because usually there you have very large payments. And given that the central bank cannot go bankrupt in its own currency, you have no counterparty risk. And that's, for instance, one of the things we hear on. In Switzerland, we have SIX Digital Exchange, which has been the first fully regulated and supervised digital exchange based on distributed ledger technology. And there we hear from the banks that are participating that they would like to have a wholesale CBDC, because right now SDX works with a stablecoin issued by SIX. And the banks say we have a counterparty risk. If we have very large payments to make and we have that stablecoin from SIX, if SIX would go bankrupt, we have a credit risk here, which we would not have if it would be a wholesale CBDC. So actually we get a demand from the industry there for a wholesale CBDC. And then you can still have stablecoins, privately issued stablecoins for retail use for the public at large. Now, let me say something more about these projects in the last 10 minutes that I have here. So, SIX Digital Exchange, as I said, was the worldwide first regulated, supervised, blockchain-based digital exchange. And I think that what's also, in my view, obvious is that if you want to do a wholesale CBDC or something like that, really the use case has to come from something else than from the payment. It's always that you have a use case like here for digital assets, and then you need to make payments. And these payments on the blockchain you can make either with stablecoins or you can make them with a wholesale CBDC. So on the left side you have the Swiss stock exchange, the traditional Swiss stock exchange still existing, but there you see you have basically for one trade, if you want to buy let's say a share, then you have to go through 4 different platforms. You have the trading platform, you have a clearing platform, then you have a settlement platform just to settle basically the digital assets or the traditional assets, and then you have a platform settling the cash, the payment. And on SDX on the right side, where everything is on the blockchain, you have one platform where everything happens. You have immediate settlement, atomic settlement. You have not this T+2 that you usually have on the traditional exchanges. You can use smart contracts, both on the asset side and on the cash side. And you have only one ledger, which saves you the work and also the errors that happen when you have to basically copy records from one ledger to the other. So there are clearly a lot of advantages, but on the digital asset side. And then you just need a means of payment, and that can be a stablecoin or it can be a wholesale CBDC. So actually we are looking into different possibilities. So we have 3 work streams right now at the Swiss National Bank. One is that Model 1 there is that we say, okay, why don't they operate with the privately issued stablecoin issued by SIX? But let's make the risk profile more like a CBDC by basically making it bankruptcy protected, in the sense that if you hold a stablecoin from SIX and SIX would go bankrupt, SIX is backing their stablecoin with an account they have with us, with the Swiss National Bank. So it's backed not by a commercial bank deposit, but by a central bank deposit. And we are looking now into legal possibilities if you would hold as a bank, as a financial institution, because it's only financial institutions that can access SDX at this stage, that you could get access directly to the money on our bank account. So the risk profile would be much closer to a wholesale CBDC. So that's one work stream that we look into. The other one is wholesale CBDC. We have already tested that. That's called Project Helvetia. We had stage 1, which was basically about technology. We had stage 2, where we had real banks involved in tests. And we went from the core banking system into the core banking system of Swiss National Bank, into the core banking systems of the commercial banks. So we really did end-to-end trade of digital assets and of wholesale CBDC. And now we go into the 3rd stage, starting in December, where we will issue wholesale CBDC in a production environment, but only on specific days. So it's not going live basically every day, but we will define specific days where we will allow both issuers and traders to use the wholesale CBDC. And we are in contact with several interested issuers, both international and domestic. So that will start in December. And then the 3rd work stream would be the model where we actually link the DLT, the blockchain, to the current deposit accounts. We already tested that before. The problem there is, of course, that you have to synchronize the 2 platforms. You cannot use very well smart contracts. So we are looking into possibilities to make changes to our traditional platform or to the link where we can then actually make something that is more smart contract friendly and where you also have much closer, something much closer to atomicity than what you have right now. But overall, I think the biggest advantage you still get using a wholesale CBDC and have cash and digital assets both on the same blockchain. Now, another project that we had and just recently issued a report, and that might be interesting to you, is we actually copied something from decentralized finance. And that is a decentralized exchange. So together with the Banque de France and the Monetary Authority of Singapore, we basically built not Uniswap, but more like Curve. But we built a decentralized exchange on Ethereum, on a public blockchain. And then we had the three platforms, one for the Swiss National Bank, one for the Banque de France, one for the Monetary Authority of Singapore. And the commercial banks could then get wholesale CBDCs on these domestic platforms, go through a link provided by the central bank on Ethereum, and then use that decentralized exchange that we built to exchange Swiss franc for euro or for Singapore dollar. And as I said, that's something that we do not intend to implement shortly, but I think an interesting use case for this decentralized finance application that we are using as central banks. And then the final project, which might be interesting to you, it has been mentioned, is the project with David Chaum. We are working on a prototype CBDC. It could be a wholesale CBDC, could be a retail CBDC. But what we really try to do is a template for possible CBDCs in the future, which on the one hand are totally privacy preserving. And those of you who know David, that's something that he puts a lot of effort into. So it's privacy preserving, and in the sense that you do not have to trust anyone. You don't have to trust the central bank that it preserves your privacy. It's cryptographically secured privacy. And then the other thing is that we are looking into is cyber resilience against quantum computers. The problem that you have nowadays is that almost all of the public key cryptography that is used is vulnerable to quantum computer attacks. And usually, one thing that came out of this project, usually people tell you, well, that's not really a problem. As soon as we have quantum computers, we will switch to post-quantum cryptography. Well, two problems with that. First of all, states and secret service agencies will not tell you when they have a quantum computer. They would be very stupid if they would tell you that. They rather will use that as long as possible before people find out that actually they have a quantum computer. So the day you hear that quantum computers are workable will not be the day when they are using them. They will be much, much, much before. So that's one thing. And then the whole idea that you just replace whatever you have now as public key cryptography with post-quantum cryptography is not that easy. Actually, what we have seen in these experiments where we also tried that approach is that because your files are much, much larger, no matter what kind of post-quantum cryptography you use. We use lattice-based post-quantum cryptography, and it's very difficult to get any scale on that. You need a lot of engineering before you can optimize that. And so if you want to do that, you better start today, because it's not going to be something that you just switch your cryptography and then it works. So that's one thing we learned from that experiment. And also, the way actually we do it here, we do not use public key cryptography to protect it against quantum computer. We use symmetric cryptography. We use hashes, basically. We have a system of hashes where you can detect an attack immediately. So that's also one of the kind of the philosophies you want to put in there. Do you want to protect it against quantum cryptography, not knowing against quantum computer attacks, not knowing what they will be able to do, not knowing what kind of mathematical solutions will come up for some of the post-quantum cryptography? Or do you want to have a system where you know immediately if it has been attacked? And we went basically the second, we did both routes, but we thought at least the second route is more promising. We will issue that report probably somewhere in November, and that might also be interesting to you. So to summarize everything, can Bitcoin, stablecoins, CBDCs coexist? As I said, I think they can, but they will play different roles. I see Bitcoin more as an asset where you maybe put your investment in, where you put your savings in. Stablecoins clearly can play a role as a means of payments, privately issued means of payment. Like nowadays, we have privately issued means of payments in the form of commercial bank deposits. And CBDCs, I see the role more on the side of wholesale CBDCs, where financial institutions and also in the future stablecoin issuers can use that to settle payments among themselves. Thank you very much.